Open your paycheck, look at the final number, and notice how much of your money disappears before it ever reaches your bank account. You see it again at the store, that gap between the price on the shelf and the total you pay at the register. It can feel like your money is being taken at random intervals without a clear reason. These deductions are specific tolls collected at 4 predictable intersections of your life: when you earn money, when you spend it, when you grow it, and when you own it. Governments use these collections to fund shared services like healthcare, schools, and roads. Viewing taxes through these 4 intersections provides a clear map of how a society pools its resources. The first intersection is earning. Income tax is the most common version, applied directly to the money you bring in from a job or freelance work. This chart shows how a progressive tax structure works. As your total earnings climb higher on the bottom axis, the percentage you owe moves up in distinct steps. Businesses face a similar toll, called corporate tax. They pay a percentage of their net profit, the money left over after they subtract all their business expenses, like rent and employee wages. Lawmakers constantly debate these rates, trying to collect enough for public projects while keeping the tax low enough to attract business investment. These taxes on earnings serve as the foundational engine for a government, ensuring that a portion of new wealth is immediately set aside for public infrastructure. The second intersection happens when you buy things. Sales tax is a consumption tax, meaning it only applies when you choose to spend your money. The retailer collects it at the register and passes it to the government. The rate depends entirely on where you live. Some places charge nothing, while others add over 20% to your bill. Many countries use an alternative called value-added tax, or VAT. This diagram shows how the tax is collected at every step of a product's journey, from the manufacturer to the distributor and finally to the retailer. Businesses in the middle of this chain can reclaim the tax they paid on their supplies from the government. Because those businesses get their money back, the entire cumulative cost of the tax is added to the final price paid by the customer. Whether a country uses sales tax or VAT, consumption taxes ensure that everyone contributes to the public budget simply by participating in the daily economy. The third intersection is growing your money. If you buy an asset, like a house or a stock, and sell it later for a profit, the government takes a cut of that gain. Most countries track how long you held the asset, drawing a line at the 1-year mark to distinguish between short-term and long-term gains. As shown on the left, selling quickly often leads to a higher tax. Holding for more than a year, seen on the right, usually lowers the rate. This encourages stable, long-term investing over rapid market speculation. This allows the government to generate revenue while actively influencing the timeline of how people invest. The final intersection involves what you own and what you leave behind. If you own land or a building, you pay an annual property tax based on a percentage of its assessed value. This is the primary way local governments pay for neighborhood services, like public schools, fire departments, and emergency responders. When someone passes away, a final toll called inheritance tax may apply to the value of the assets passed down to their heirs. Most jurisdictions only tax estates that exceed a high dollar threshold, and close family members are often exempt. This system was designed to prevent vast fortunes from concentrating within a few families over several generations. These taxes ensure that accumulated wealth continues to support the maintenance of the society around it. This timeline brings all 7 taxes together. When viewed in sequence, they match the actual milestones of a person's life. The global tax code is a deliberate system tied directly to predictable daily actions. When you look at a store receipt or a pay stub, you are seeing the specific mechanism used to pay for local schools, roads, and hospitals.